Welcome back. Well, it's going to be a bit of a challenging morning for the bulls because the GIFT Nifty suggesting that we pull back, global factors in a bit of a flux, and we have HDFC Bank that will be reacting to its numbers. And overnight, we had the area that was down close to around 6.5–7%. Devin Choksi, Managing Director at DR Choksi Finserv, joins us on the show. Hi, Devin. Good morning. Well, on one side, you have valuations that are in favor of HDFC Bank, but valuations can only do so much, right? The stock needs to move up if the operational performance improves. And clearly, it was short yesterday. The NIMs were under pressure, and maybe there are more pressure moving ahead as well. You also have a number of branches that they've opened are far lower. And maybe that, the struggle for deposits for the industry itself is very real. What's your view on HDFC Bank if it opens up down 5% odd?
Good morning, Nigel. Well, on one side, I think the headwinds are there. Certainly, the more amount of money is getting into the investment markets vis-a-vis, I think, the bank deposits. So I think for the banks, the cost of money is definitely becoming costlier. And that does get reflected into the needs of the bank. So that is one area where probably I think one will be watchful, mindful at the same time. On the other side, the rate hike cycle, having seen most of it, I think, picked out. Probably in subsequent quarters in the calendar year 24, we should be seeing some amount of moderation to fall into the interest rates. And that's where probably I think you are likely to see the actions emerging much more stronger going forward. At this point of time, I think we do believe that on one side, the corporate loan demand is increasing, SME, MSME included. And at the same time, I think the retail loan portfolios are also growing and growing very smartly. So from all those perspectives, I guess I think the demand scenario is not in a question. Question is largely in the area of I think maintaining the margins and also I think the provisions which have been made into the books. That's where probably I think the stock may have some amount of pressure in this quarter. However, I look at it a little differently. I see the kind of growth which is happening into the economy, and that is where probably larger banks like HDFC will have relatively, I think, stronger business to talk about, be it in the mortgage business, be it in the retail business, be it in the corporate business, or even for that sector, prime sector, where the portfolio seems quite balanced. In my viewpoint, I think the growth is going to be driving the ultimate stock prices. And that's where I see an opportunity. If current result gives an opportunity to buy the stock at corrected levels, at lower levels, then probably I think this would become a meaningfully buy opportunity into the stock for 25–30% gains going forward.
Okay, absolutely. Just a couple of sort of summation of what brokers are also saying this morning. I mean, it's of course one of the most widely tracked stocks, HDFC Bank. So just 2 or 3 key things to monitor which sell-side brokers are saying. One, of course, is the ability to raise deposits for sort of growth come borrowing repayment. So the credit deposit ratio is at about 110 odd percent. And that is one of the things which pointing in that direction that eventually if HDFC Bank has to garner deposits, maybe it needs to pay more. So costs go up a little bit. If it is not able to that, then advances growth starts to hurt a little bit. So in any case, it's in a bit of a tough spot there. That's what some of the brokers are highlighting, analysts are highlighting. The net interest margin is another key sort of variable. This, of course, quarter net interest margins have disappointed. There are also, some who are, of course, outrightly calling it is a disappointing quarter, nevertheless, saying there's the first year-on-year EPS decline in a decade. So that's what's coming through. Remember, this is a bank which was famed for, if you remember, over 25% growth. I mean, actually, at one point, it grew some profits at some 30% year-on-year. For many years, that dropped off to 25%, then it dropped off to about 20% or so. So growth, of course, as base becomes very large, has been coming off. And now, as one of the analysts points out, this is the first year-on-year EPS decline in a decade or so.
Okay, well, let's see how the street reacts to that. Doesn't look like it's going to be good, but Devin Choksi is still with us. Devin, the other stock I wanted to talk to you about was L&T Tech. Now, it was barely a 1% growth in constant currency terms, so, hardly any growth. Management commentary was not too bad, but given the kind of outperformance that we've seen in the mid-cap IT space, do you think there could be a big sell-off here? Are you cautious? And what's your view on L&T Tech particularly?
Well, Sonia, good morning. The company remains, I think, absolutely very convincing. And I'm probably not, keeping too much of attention on the quarterly results of the business. if you see the order book of the company for execution, that gives you sufficient amount of visibility for growth in subsequent quarters as well. And that is more important. I think the particular quarter in which I think if the constant currency growth has remained muted, it could be the reason for the year-ended quarter as far as I think the calendar year 23 was concerned. The other aspect is that the niche areas in which this company is operating, I believe that I think they continue to hold the promise of winning some of the larger contracts from the customers, including the regular orders, I think, which comes into them. So that also remains, I think, extremely strong proposition. Coming to the price, I agree that I think the price is the maximum. Probably, I think the stock has given good amount of appreciation from what it used to be at around 3,000 odd levels at the beginning of the financial year to I think what it is right now with around 5,500, 5,600 kind of a price level touched. So to an extent, I think it might have some amount of cool-off effect, but the fundamentals of the business do not change. Maybe I think some amount of price correction or moderation is due, which could possibly happen, and that could invite new investors into the stock from the investment perspective, given the kind of fundamental strength that this business is demonstrating.
Well, Devin, everyone's talking about the Indian stock market. Participation is increasing, volumes is increasing, number of demat openings is increasing. So various ways of playing it, right? Exchanges you have an unlisted company as well out there in NSE, but you require far bigger ticket size. The easier way is to maybe play it via brokerages. And in the last few days, you had Anand Rathi Wealth that came out with a set of numbers. Their stock sold off 5%. Yes, you had Angel One that came out with a set of numbers. Well, that was down more than 10%. You have ICICI Securities, which the numbers look quite good. What's your view and what's your preference on this pack?
Well, it's always, I think, a growth which is going to drive the entire business segment, entire ecosystem that we are talking about. Be it the brokers at the bottom end of the pyramid, or be it, I think, the depositories or the stock exchange at the higher end of the pyramid. Probably, I think we are going to see the growth continuing in this particular business. The question is, I think, quite important. I think which one should one go for? Well, I guess I think the exchanges remain favorite and depository thereafter, because these two areas where the relative amount of competition is less, and at the same time, I think the business growth dynamics suggest that I think these businesses are going to grow faster and bigger. So the bigger companies like NSE, eventually when it gets listed, I think would have meaningfully good amount of participation coming in from the investors, and that's what I think the take would be. The similar, I think, proposition is emerging even for stock exchange like BSE, where they are equally putting emphasis on other segments apart from equity. So to a greater extent, I think we are likely to see the overall participation into this space. And for us, I think the exchange and the depository remain relatively more promising, given the kind of nature of growth that we are seeing into these businesses. We would stay invested in this particular business.
All right. Devin, thanks a lot for giving us a quick call on all of these stocks, big stocks in focus today. Appreciate your time here. That's DR Choksey FinServ talking about all the big stocks in focus. But let's shift focus.